welcome back to the Don and Gino Real Estate and Finance Show right here in your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Welcome back to the second half of the Don and Gino Real Estate and Finance Show, where every Saturday, that's right, we get the pleasure of spending our Saturdays with you from 9 a.m. to 10 a.m., sharing what you need to know, want to know, should know about real estate finance. And we always say so much more because we let you know what's going to happen with our community and outside our community today. We get a little help from Mike RAZAK, one of our top, if not the top, one of our top loan officers, mortgage planners, I'll say. A loan officer, that's a loosely termed, now I say he's a mortgage planner and a mortgage professional. Mr. Michael RAZAK, thanks for joining us again for the second half.
Thanks for having me, guys.
Cool, man. Well, we talked a little bit about this last segment, but we've known each other for 13 years, and
right.
You were actually instrumental in helping to bring me to Skyline.
Yay!
Way back when, telling me how great a company it was,
Yeah.
and look at all these years later, and both of us still here.
That's
so
right.
that should be a testament
right.
to how great the company is.
Sure.
And
Yeah.
I was lucky enough to get hooked up with Don, and that turned into a great connection
Great
as well.
partnership, yes. And Mike's now partnering with us and helping us run our Sherman Oaks office. Actually, you just got you've gotten 2 new offices.
That's right.
You're moving up like the Jeffersons.
Yeah, well, need the space for all the production that we're doing and, bringing a value to the community. So it makes sense. Right?
Bringing a value
Yeah.
to me. Yeah, I love your new office, by the way.
Thank you.
Yeah, you're right there with next above John Arrow Group, right?
That's right. That's
right
right.
off of Ventura Boulevard.
That's right. And we make it super convenient for the agents. So it's just another way we bring value without spending money on people.
Yeah. So it was funny during the break, we were talking a little bit about, what is Michael seeing? Because it's different, right? What we see is real estate is ultra local. Hyper local, if you want to call it. And so we were asking Mike, hey, what's going on over there? And it's funny, the 2 things he brought up are really not relevant up here, so it's kind of interesting. Let's go ahead and talk about it. I love your...
it may be because the
well,
Great Northern
I'll
Migration
get there.
that you called it.
I'll get there.
Cheated.
Right.
Yeah. You're getting ahead.
Stealing my thunder.
Actually, once you
Right.
join us, you see how handsome Mr. Mike RAZAK is. We have this recorded for you. We have video, thanks to Furman over there. He's been recording our show now for like 5.5, 6 years or whatever. Bottom line, go to donandgino.com, click on the live stream button, and we're waving at you now. Mike, wave to the camera, buddy. There you go. All right. We have Mike sharing
was
with
going to tell us about his Great Northern Migration.
That's
Tell us
right,
what
that's
that means.
Right.
Good
The Great
stuff.
Northern Migration. So what it is it's I live in a specific area for those of us that are listening that aren't from the California area, but we live in an area called the West Side, and the West Side includes a higher end home, right? So they'll start at the 9s and they'll go up to the the $5 million range, and that's your typical normal 3-bedroom, 2.5 bath. And so what I'm seeing is what's called I want to trademark it, the Great Northern Migration. So what's happening is those people that are working, normal jobs, earning anywhere between $50,000 to $150,000 a year, they can't afford a $2 million house. Not to mention, we forget about the down payment. How about just the payment itself? So they're moving north. They're moving north into the East Valley and the North Valley, and actually pushing all up into Santa Clara Valley as well.
Yep.
So these are the more affordable price points between $450,000 and $750,000. You can put it 10% down on a house like that and actually live in a house with a yard and have a actual quality of life versus
a loft.
Right. Where you got to carry all 27 pounds of your groceries up an elevator, and hold on,
Who can afford 27 pounds of groceries? Have you gone to Whole Foods? You get like 2.7 pounds of groceries for $100.
Well, how about just the water by itself, right? So yeah, but it's a thing. It's a real trend that I'm seeing, and it's actually usually young people, right? And so even those that are part of the gentrification that we hear about so much, where we bring up Echo Park and Highland Park and downtown LA, and they're making these places really, really nice, but it's not a family lifestyle. Right. It is a lifestyle of what we call optics, right? It looks great. And these kids they're all moving north. And they are millennials. These are the people that aren't supposed to be buying homes. Well, guess what? They just bought their first home, they're buying their second one, and they just made a lot of equity in their first one.
Well, that gentrification area, nothing happened. Nothing bad happened there for them. I mean, they made a fortune.
Not.
You're talking
That's
about,
right.
The national average, as Don and I talk about on the National Real Estate Cafe, has been, somewhere between like 4 and 8% almost everywhere.
That's right.
In some of those areas, like Highland Park and Echo Park, you're talking about 10 to 20%. Definite double-digit growth.
That's right.
And, if they're taking good advantage of their capital gains exemption, if they've been in there for just 2 years, made good money, time to move up and, like you said, get a yard.
That's right.
Get a little more square
it's-
footage, an extra bedroom.
At first, it's like you said. Mike he's like everybody. It was cool. You go and do it. You enjoy it. You're having fun and stuff. But there comes a point where you get burned out, and it's time to grow up.
That's right.
You want to have a family and all that. You need a house, a yard, extra bedrooms, and all that type of stuff. And now's the time. Thank goodness they have a lot of equity. So you're helping a lot of these transition. A lot of people transition.
Well, they're move-up buyers, and we talk about this all the time.
Yeah.
There's no better time to move up than right now because
right.
they could take advantage of the capital gains exemption.
That's right.
Because they have capital gains to exempt, which is important.
Yes.
We don't have that all the time. And interest rates remain low.
That's right.
A lot of times when these things happen, interest rates have already spiked, and that erodes at some of your gains.
That's right.
But because interest rates have remained low, they can make a lateral interest rate move and book all their gains.
Right, and with the Skyline platform with Lock and Shop, you can actually get your loan ready ahead of time, lock it in, and go find that place while you sell your old place.
Okay, so let's talk a little bit about that because we haven't talked about it too much on the show.
haven't.
Yeah.
So go ahead and pitch us on the program. Tell us what it's like.
Sure. So what it does essentially is 90% of everybody out there will get pre-approved, pre-qualified. Well, really what that is that's one loan officer's or mortgage planner's idea of what you're going to get approved. Sometimes they'll get it insured through Fannie Mae and they'll get a case number, but it still hasn't been fully approved through an underwriter where they can actually deliver that collateral and you're going to get a mortgage payment next month. What Lock and Shop allows you to do is, at least at the minimum, it allows you to get your loan fully approved so that when you make your contingent offer, because you got to sell your house first to buy the next one, you actually have a loan in place so that the only variable remaining is the selling of your home. And in Southern California, luckily, it's so hot.
Right.
The average days on market is only about 2 weeks. So you'll get your home sold, your lock and shop rate and approval is good for 60, maybe sometimes 90 days. And so you have enough room to make that transition without having to sell your house first and wondering, where am I going to go?
Right. So I want to
fear of where your payment's going to go.
That's right, that too.
Well, I also want to touch on that, right? Because people think interest rates are going to stay low forever. So what you want to do is you want to be in a position where you can lock if you need to. It doesn't mean you have to lock.
That's right.
It just means you want to be in a position where you can. And historically, most companies, every company I've ever worked at, you can't lock unless you have a house.
That's right.
And that's the way of a company protecting some of their hedges and things like that. Well, at Skyline, what they've said is, no, we trust our relationship. We trust the relationship you have with our loan officers. And we know that you're going to be loyal. And so we're here to protect your interest rate should they start to go up. And that's your job, Mike, is to say, hey, everybody that's locked in my pipeline today, I don't think rates are coming back down. Let's lock them all.
That's right.
And so
Well,
that gives
the
you some
key
protection.
thing is we always say this, is a lot of you out there, you get your payment, and some of you want to play that game. Play the, like, well, maybe the payment will go lower. But here's the fear. Okay, you may save $26 to $30 in your payment, but if the market changes, and it can change 0.25% to 0.5%, you do not want your payment going up even $10, let alone $29. And if the rate changes, it could go up $50 to $100, which basically takes you out of the market you were in.
Right.
So at least you're protecting yourself.
Especially if you're pushing the envelope.
Yes.
Absolutely.
You're right.
Yeah, yeah.
Right.
We have seen people who are like, oh no, now that I wanted my payment at this, and now it's going to press. Or like you said, we push the envelope for them.
Yeah, and Don brings up a great point, which is rate erosion is much more of a significant and bigger fear, not just fear, but likelihood than an improvement. Yeah. We like to say, if you got a better payment from where you started, you got really lucky. So yeah.
Well, especially right now. I mean, and this varies depending on the marketplace, but I keep looking at this bond market and I don't see anything on the horizon that says rates are going to get better. I mean, really, the only chance that we have for rates to get better is to go to war. I don't want to bank on that. So let's not hope for lower rates if that's the only reason why we get them.
And you don't really need much. I mean, right now the rates are still near all-time lows.
That's right.
I mean, ridiculous. I mean, you were talking low 4s, some 3s, and if you go now, a lot of you are out there looking at adjustables because you're realizing, you know what? I never keep a loan for more than 4 or 5 years. On average, you keep it 6 years or a home. So why not look at 7-year and 10-year ARMs and save potentially 0.5 to 0.75%?
Yeah, so I'm going to say don't be that guy, right, or gal. I've had really long-standing clients that every time they get a loan, I try to talk them out of the 30-year fixed, and every time they get a 30-year fixed. And finally, it takes about 3 times, usually, where you finally say, okay, you ready now? And they go, yes, I should have had a 7-1 ARM the whole time. And that's just a reality, is that, listen to your mortgage professional, look at what you've done historically, And chances are you're going to repeat that. Now, remember, just because you're going to be in a home forever doesn't mean you'll be in a loan forever.
That's right.
You know, you're going to want to cash out to do home improvements. You're going to want to cash out to pay for your kids' college. You're going to want to cash out for X, Y, Z reason. I guarantee you, if you owe $500 and it's worth $1 million, you're going to want to get to some of that.
That's right.
Well, we're about to go to break, but the moral of the story, and we'll talk more in the break, is that the difference of working with a true professional. You just mentioned, I've done 3, 4, 6 loans for a client versus you maybe went to an internet lender. Try calling that lender back and see if they're there looking out for your best interest or there as a resource. Mike RAZAK's a resource for his clients for life.
Absolutely.
And we're going to talk about the importance of that when we come back to the final segment of the Don and Gino Real Estate and Finance Show.